Hello everyone. Let's walk through ICICI Bank's quarterly results and see what's really happening behind these numbers. This quarter, ICICI Bank's revenue was 49,080 crore compared to 48,387 crore in March 2025 and 44,582 crore in June 2024. That is a 1.4% increase quarter on quarter and a solid 10.1% rise year on year. So revenue growth has slowed compared to earlier quarters, but the bank is still adding steady income year over year. And total expenses were 31,991 crore, lower than 37,588 crore in March 2025, but slightly higher than 29,387 crore in June 2024. So employee costs were 13.5% of the expenses, almost the same as last year, 13.8%. So the bank reduced expenses compared to the last quarter, which helps support profitability. If you see the financing profit, which was minus 6,002 crore this quarter, that is better than minus 12,248 crore in March 2025, but worse than 5,927 crore in June 2024. So core banking margins are still under pressure, but the situation has improved compared to last quarter. If you notice the other income, which was 25,496 crore compared to 31,361 crore in March 2025 and 22,688 crore in June 2024. So other income continues to play a big role in supporting profits, though it dipped from last quarter's very high level. And profit before tax stood at 19,494 crore compared to 19,113 crore in March 2025 and 16,761 crore in June 2024. That is a 2% quarter-on-quarter increase and a 16.3% year-on-year growth. So profits before tax are rising steadily, showing good operational strength. And if you see the net profits, which was at 14,456 crore compared to 14,354 crore in March 2025 and 12,463 crore in June 2024. The growth is modest, which is 0.7% quarter on quarter, but much stronger in year on year, which is 16%. So bottom line growth is consistent. The bank is holding steady on profits. And if you notice the EPS, which came in at 19 rupees compared to 18.96 in March 2025 and 16.62 in June 2024. So quarter on quarter growth is almost 0.2%, which is flat. But year on year growth is strong at 14%. So shareholders continue to see stable value creation. Overall, revenue up 10% year on year, though only slightly higher than last quarter. And if you notice expenses, which fell compared to March and improving efficiency. And financing profit remains negative, but much better than last quarter's deep losses. And if you notice the other income, which dropped from March, but still gave strong support. And finally, net profit grew 16% year on year to 14,456 crore, a sign of healthy long-term growth. So in short-term view, profits may remain stable, but growth is slowing compared to earlier quarters. Core banking margins need more improvements. But in the long-term view, with steady revenue growth, improved efficiency, and low NPAs, ICICI Bank remains one of the strongest private banks. If financing margins improve, profits can accelerate further. So, what do you think? Can ICICI Bank bring its financing margins back into positive territory while maintaining double-digit profit growth? Let me know in the comments.